Understanding Japan Incorporated, A Journey Through Economic Triumphs and Trials. Japan Incorporated is a term that encapsulates the economic ethos of Japan, particularly during the late 20th century. This descriptor signifies a highly centralized economic system characterized by a model of corporate capitalism that prioritizes export-led growth. Despite being a beacon of industrial prowess and innovation, Japan faced significant economic challenges, particularly in the 1990s, which reshaped its corporate landscape and public perception. The evolution of Japan Incorporated. Emerging primarily in the 1970s and 1980s, Japan Incorporated symbolizes Japan's transformation into a capitalist culture steeped in corporate alliances and governmental oversight. During this era, the partnership between Japan's bureaucrats and large corporations fostered an environment ripe for economic expansion. This process, often referred to as the Japanese miracle, was driven primarily by American investments following World War II and stringent government intervention in the economy. Key features of Japan Inc. 1. Export-led growth. Japan Incorporated was notably marked by a strong focus on exports as a growth engine. The Trade Ministry played a crucial role in crafting and implementing policies that favored domestic producers and restricted foreign competition, allowing Japanese products to gain a strong foothold in international markets. 2. Keiretsu system. Another hallmark of Japan Incorporated was the establishment of Keiretsu, an intricate web of alliances among businesses that ensured mutual support and stability. This system facilitated cooperation between manufacturers, suppliers, and banks, thereby bolstering the economy. 3. Government intervention. The Bank of Japan (BOJ) was instrumental in this economic strategy, providing substantial loans to businesses to stimulate private investment. The close collaboration between government officials and corporate executives defined decision-making processes and helped identify and nurture national champions. The decline, the lost decade and beyond. Despite the remarkable successes associated with Japan Incorporated, the situation began to wane in the early 1990s, leading to what is infamously referred to as Japan's lost decade. This period of economic stagnation was fueled by a mix of speculative investments, rising debt levels, and a mismanaged monetary policy. Factors behind the lost decade. Speculation and inflation. The late 1980s saw record low interest rates that ignited rampant speculation in the stock and real estate markets, creating inflated asset prices. When the bubble burst, it revealed deep flaws in the financial system. Government response. The Japanese government's attempts to reinvigorate the economy through public works projects were largely ineffective. Moreover, the BOJ was criticized for its slow response to the burgeoning crisis, prompting the finance ministry to increase interest rates sharply. Debt defaults and banking crisis. The resulting crash led to a wave of defaults on debts secured by inflated assets, giving rise to a severe banking crisis. Many banks faced insolvency, necessitating massive government bailouts and consolidations in the financial sector. Societal impacts. The economic malaise had profound implications for Japanese society. With the economy in decline, consumer behavior shifted dramatically, people prioritized saving over spending, exacerbating deflationary pressures. This behavioral shift, combined with an aging population and a reluctance to raise taxes or change retirement policies, contributed further to the prolonged stagnation. Resurgence and transformation. In the years following the lost decade, Japan has undergone significant changes, moving beyond the old paradigms of Japan Incorporated. The corporate landscape now features an increased openness to foreign investments, a more liberalized economy, and an emphasis on innovation and entrepreneurship. Current economic landscape. Today, Japan's economy is characterized by increased global integration. Japan has actively sought to engage in international trade agreements and partnerships, increasing its competitiveness in a global marketplace. Technological advancements. As a leader in technology and innovation, Japan is now focusing on emerging industries, including robotics and renewable energy. Adaptation to demographic changes. With an aging population, Japan has also begun to adapt its labor policies and retirement system, welcoming foreign workers and adjusting policies to support sustainable economic growth. Conclusion. Japan Incorporated reflects a rich yet complex narrative of economic growth, innovation, and stagnation. While the collaboration between government and corporations was critical to Japan's rise as an economic powerhouse, the subsequent challenges of the lost decade revealed vulnerabilities that have prompted profound systemic changes. As Japan continues to navigate its economic future, the lessons learned from the Japan Incorporated era remain pivotal in shaping its trajectory on the global stage.